Good morning or good afternoon, traders. This is Bruce at Bookmap, and welcome to the dxFeed Bookmap US Equities webinar here. So what we're going to do is take a look at quite a few equities and understand the Bookmap dxFeed, how we connect to the equities, and overall subject here is get a competitive advantage trading US equities with the data visualization here in Bookmap. Okay, it's pretty unique. Just the full depth of market that you're going to get with dxFeed is an advantage right off the bat. All right, so I'll go through and explain what I mean here with the full depth of market here. But let's continue on here. Oh, I forgot to go through the risk disclaimer. Trading equities and futures involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, about me, Bruce Pringle, a trader of 10 years in a variety of markets, order flow specialist at Bookmap, lead at Bookmap Trading Education, expertise in order flow and market microstructure. You can follow us on Twitter at bookmap_pro. We also have a YouTube page, all sorts of videos there, and you can reach us at support@bookmap.com. All right. Okay, so right off the bat here, pretty bold statement, getting a competitive advantage right now. Okay, how are we going to do that? How am I going to show you that if you're even a new trader or you've been trading here for decades? All right. Well, we're going to look at the liquidity in the market. Okay. Many of you are probably familiar with a DOM, a depth of market, well, we're going to be able to extrapolate that DOM data on much higher time frames with unlimited depth. Right, and I'll show you what that is. We're going to read the order flow, the microstructure, macrostructure. We're going to be able to see algos. We're going to be able to see larger players, and go through some trade examples of other Bookmap traders. But a focus here on live market analysis and set some orders as well. I'll show you the one-click trading. But because we record the depth of market, okay, and we can read the algos and we can read the larger players, it's all because it's showing the historical DOM. Okay, everything is captured. All right, so start off here looking at the Bookmap chart, and we're going to go through. Well, the goal here is to be able to simply read something like this and analyze it and look for an advantage. For those of you who are new here, this probably looks quite foreign to you, but we'll go through several different examples here so that you can see exactly and read exactly what's in that chart. Okay, so overview, dxFeed Bookmap, what is it? Okay, it's a trading platform connected to dxFeed, and you can also trade through interactive brokers via dxFeed. Okay, unique visualization software, that's our advantage compared to other platforms. Other platforms aren't showing the transparency that we are. The dxFeed connects Bookmap to all US equities. It also allows for other markets like futures and digital currencies. Okay, so I think we'll skip the poll here. It's asking about the DOM, if you guys use a DOM, and how you use it. But we'll move on here and just go through market data here, this slide. 10% of the data in traditional charts, well, that's all you're really getting because you can't see the depth of market. You're only looking at executed volume. You're looking at aggregated data. And what do I mean by aggregated data? Well, you're looking at bars of data within some sort of time period, volume period, rotation period, doesn't matter. It's still aggregated data. We try to get insight to what's inside some of those bars with indicators, which are derivatives of time, price, and volume. Well, in Bookmap, you're going to be looking at 100% of the data. You're going to, of course, look at the executed volume, but it won't be aggregated data. And you're going to see the depth on the bid and the offer, both current and historical. Okay, so it's important to note that at the bottom of the trading pyramid is data. Based on good data, you're making, or bad data, you're making information or decisions. You're gaining information. Okay? And then based on that information that you read from the data, you start to move into knowledge, understanding of what that information means. And then from that, you really start to understand and anticipate what's going to happen. And that's going to lead to the top of the pyramid, which is wisdom. Okay, so data makes the difference here. Without good data, it's garbage in and garbage out. Okay, so dxFeed Bookmap, it covers all US equities, full depth, low latency. We have servers around the globe, and you have some choices here, which I'll get into at the end of the webinar. Choices here are NASDAQ total view and last sale, EDGX, which is BATS, or a combination of both. All right, so let's see here. All right, well, I'll cover this. Need to cover exactly what the DOM is in Bookmap, and then we'll move on from there. But using the DOM on stocks, this is what it usually looks like here. Okay, you have your top of the book here. Okay? On this side, you have your ask, and on this side, you have your bid. I'm sorry, bid is on the left side, ask is on the right. And these are traders or liquidity providers. Okay, providing liquidity. You can see the size, the amount of shares in each area here, and they want to be buyers over here. They want to be sellers over here. Okay, the DOM is good. The pros use the DOM. You can see the auction. You can start to really optimize your entries and exits, and you can see the larger players here, but nothing's recorded. Okay, when they change their information or their data here, or they add or pull liquidity, it's gone. You're gonna have to remember that area, that price, how long they were there, what were the areas around it, were they starting to front run it or layer in behind it, etc. Okay, comparing with Bookmap, well, let's just go through the simple comparison. The top of the book here, your best bid and offer. Okay, here it is in Bookmap. Okay, it's best bid and offer is here. Okay, the dashed red line is the best offer, dashed green is the best bid. Then the depth here on the bid, okay, here it is in the DOM, and then here it is in Bookmap, okay, it's below current price. Okay, and then on the offer, it's above current price. All right, well, the disadvantage of that DOM, as I mentioned, is no historical data. Okay, so you're not able to read the algos. It's very tedious to remember the numbers, how long they were there, etc. But you can't see any structure either or context in the microstructure and macrostructure. Okay, so that's the advantages of Bookmap. Is first we take the data here in the DOM. Those numeric values is a consolidated data area where it's just one price level and you see all of the liquidity. Okay, and there we take it and we record it into a graphical representation here, right, in a heat map, then we record it onto the chart historically. So what you see here, for example, well, we can see that down here, this is Apple, and we see that there are 2,360 shares down here. Okay, and that's the highest area here on the bid in this view. Okay, but look way up here, and this is the full depth of market because we're looking. Let's see, it says, well, it's actually only 25 cents higher, but still, we can see very, very high liquidity up here. So like over 30,000 contracts are available up here. Where are they? 186.50 the figure, right? You see higher liquidity also down here, but not quite as high as this 30,000. And this is dominating price here. All right, now, so that area is red, and then it's recorded and plotted on the chart. Okay, so now you can see it on the chart. So let's go through the elements here on the Bookmap chart. So I just covered what the liquidity is, okay, and then showing that in the current market here with the best bid and offer, okay, as well as the historical market since it's recorded. So now we can see, well, these guys have been up here for quite a while here with very high liquidity. Okay, they jumped into the book here pretty quickly around 45 and 46, right? There was high liquidity here as well, and you can see that it actually transacted. Okay, the red dot here is the aggressor, the buyer. I'm sorry, the seller. They took all of the buying liquidity here, all the limit orders here, and they actually traded through it. Okay, that gives some insight here. We get a pullback, but we find more sellers and we trade back into higher liquidity down here as well. Okay, and then yet again down here. So anyway, now we're starting to understand the elements. We have the aggressive buyers, which are the green dots, the aggressive sellers, which are the red dots. Those are your market buy and sell orders. And then we have the best bid and offer here, both current here and then historical here. Right, and then this is your last traded volume. Okay. Anyway, if that was very, very quick. We can go through it in a bit more detail in a minute as we get into the live market if you guys have questions. Okay, but now taking that same slide here without the call outs to the elements, we can start to read the microstructure, okay, in this recent historical view here. And what do I mean? Well, look at this area here of consolidation, and we actually broke down below it. Okay? It came right back up and traded back into this range, but it was unsustainable. Okay? We didn't find buyers trade to the other side. Okay? We found more sellers actually down here again, and we find price discovery. They come in again and they hit the bid, and they come down into this area here at 186.30 and trade through it. Okay? Sellers are in control, right? And we can start to read that in the microstructure. Okay? And the way that the context between them bidding here and the aggressor who's taking on those guys on the bid and trading through them. All right, that's the microstructure, and that's what you're able to start to see since we extrapolate that depth of market data onto the historical chart. Okay, but that's not all though. We can look at it on a much higher time frame. This is that same chart moments later. Okay, we're at 180. It was right around this area here. 25 or so, where it was kind of spiking down, and looked like sellers were in control. They were in control. Actually, it was right around here, I think. They were in control as they pushed price down lower. Okay? But the bigger picture here, as we zoom out, now we're starting to see what's going on. This was a pullback and a bigger move to the upside. Okay? Buyers are certainly in control. Look at all the volume that traded up here into this high liquidity, and then it continued to. Okay, actually looking for support here around this area. We actually have exhaustion down here, which I'll go over in a minute, and then looking for a retest back up into some of the highs here, and then continuation to the upside. Okay. All of this, the heat map here that you see, these orange areas here, it's very high liquidity on the offer. These are targets for the aggressive buyers, okay, to reach that high liquidity, okay, because we're able to use that dome, that depth of market on much higher time frames here. In fact, we're using it here for the entire day. Here's your 9:30 open over here. Okay. And you can see that the auction here on the offer, they got pretty aggressive down here. We traded through it though. Okay. And it not only traded through it, but with size and volume, and we get a retest back to that area, and it continued to the upside. Okay, so targeting high liquidity here, and the swing high of the day is up here. All right, that allows you to start to see all sorts of things, patterns, and start to define patterns, what they are. We see a head and shoulders pattern here, okay, and this is a reversal pattern. Shoulder, head, shoulder. But look at them here on the bid, and look at how the aggressive sellers, they trade actually into it and through it, but they come right back in, okay, and they trade into it and a little bit through it here, but then it rotates up again. We don't find sellers any longer. Okay, in fact, we start to find buyers. We start to find buyers up in these areas, this area here, but we really see it pick up over here. Okay, and you can really see the volume pick up here and the dot size pick up in this area here. Okay, target would be higher liquidity at 102, the figure up here. All right, so there's your reversal pattern, and all of these kinds of patterns exist because of the liquidity and the order flow, how that they relate to each other. Okay? It's not that there's a head and shoulders pattern and all of a sudden everyone jumps in. It's not like that. In fact, we see them fail all the time, but you would know why they fail or why they work because you'll see it in the order flow. All right, and then this slide here, just some context of liquidity, looking at areas that were support turn into resistance. I like this slide quite a bit just because you can see it so clearly. Look here at 9:30, okay? This is your open right here, right? Look how you already understand where larger players are at the open. Okay, where are they? Well, they're here at 180, 181, 182, and 183. Okay. These are the areas where they want to trade, where they want to deal, and where they're providing liquidity. Okay. And you can see that the buyers are attracted to it. Okay. We trade through it or up into it here. We rotate back up through it. Okay. This area here at 180 was resistance. Okay, it turns into support. And we see the next level to trade is 181. This is Facebook. And we see we trade through that, and that actually becomes now support. It was resistance, now it's support. And we come up to the next area at 182, and 183 is the ultimate target, which was reached. All right, and then here's the opposite of, that area of resistance holding and absorbing. Okay, this is what absorption looks like, trading up into very, very high liquidity, 52,000 shares up here, Facebook, trades right into it at 183 the figure. And they're still up here. The buyers were not able to press through this area because there was more supply up here, okay? A lot more supply. And buyers, this is a big cluster of buying, but it was not able to trade into or through all of that 52,000 shares. So what happens? Well, we start to rotate back down because we've absorbed, or the limit orders have absorbed all the buying pressure. Okay, looking for it to come back down and test into lower liquidity, right here at 182.60 and then at 182.50 down here, which would be the target. All right. Absorption in Apple, same idea. 327,000 shares up here at 190 the figure. Okay, you can see that not only did they not trade through it, but they're still up there with looks like 200,000 still. So quite a bit of liquidity up here. All right, exhaustion and the liquidity and transactions here. Well, looking at areas of exhaustion is the opposite of that absorption. Okay, it's not trading up into high liquidity. It's not finding any liquidity nor finding any traders. Actually, it is defined as just not finding any aggressive traders. Okay, so for example, down here, look at how many trade at these little lows here, these swing lows here and here. Right? That's the exhaustion here. There's no more sellers. There's no one interested in transacting at these levels. This is how you get your volume profiles, those low volume nodes in these kinds of areas here. Okay, it's exhausting out. There's no interest. So what does it do? Well, it can't trade down here because no one wants to trade, so it rotates back into where it can trade, where majority of it is up here. Okay, in your profile, it's going to be a P-shaped profile, and it's going to come right back up into this area here, and that's exactly what it does. When you have that P-shaped profile and you have more volume trading up at the high, especially when there's a lot of buying up at the highs here, you get price discovery, okay, up into higher areas. So understanding the majority of those transactions, where they are, okay, and the liquidity, where is the liquidity, and how those buyers are in this case, attracted to that area. Okay, ignition algo. Well, this is what you're able to see here with the depth of market since it's recorded. Okay, this is looking at Amazon, and we can see that, well, you know, that's you know, $1,600 here, but right at the figure here, pretty high liquidity at 1,600. Okay, well, look at the skew in the auction down here. Okay, very, very high liquidity, a lot of demand, a lot of buyers down here. Well, since we can record all of that liquidity, look how all of a sudden it pulls here and adds higher, pulls, adds higher, etc., up into 1598, and then it stays there. Well, think of this area here, and it would be kind of difficult to track that in your depth of market, but since we record it, you know, and there's a name for this. This is ignition algo. Okay? It's skewing the auction. Okay, they're showing lots of demand, even at higher prices. Okay? It looks like the game here is to skew the auction, show lots of demand to get it to trade into and through 1600, the figure. And you can see it actually did trade through over here. Okay, so job well done, and looks like Amazon is going to accept above 1600 here. All right, here's another skew in the auction. This is JP Morgan, and what we're looking at are areas here where the very high liquidity up here at 114.50, and then look at this larger player, high liquidity, lowers it again, again and again, and it skews the auction. Okay, all of a sudden there's a lot of supply. And what is the reaction with the aggressor? Well, they don't seem so interested this time. Okay? They're shying away. We can see that action here. Okay? So it's a bit back and forth, but due to this skew in the auction, you know, looking for it to come back up into the 114.50 area is just less probable. All right, well, you know, I'm going to shy away from some of the liquidity news, et cetera. I mean, I'll cover it because this is important. I'll lead into that full depth of market, and then we'll look at the live markets, okay, and then start to analyze for the rest of the webinar here. Here is some news. Is Tesla. And this was geopolitical news. Okay, it was about tariffs in China, trade wars, that kind of stuff. And we can see the what happened here is look how right at this area here. Well, we see a lot of buying here. Okay, but look at the areas of liquidity that are pulled. Okay, they're pulling here. Well, all the way through here. All of this is pulled. Okay, they actually added in a bit here, but then they pulled. Okay, all of this pulled as well, but these guys up here remained in the book. So they know something, or at least they think even if price comes up here, they want to be sellers in Tesla. Okay, so you're getting insight to their fundamental research. Okay, you know that this is what they value here, it being a sell, because they stayed in the book even during this fundamental release. Okay, this is very similar to the open. Okay, so here's our 9:30 open right here. This is all pre-market data. Okay, so we can see the where they already are in Amazon. They're up here at 1580, providing high liquidity. We can also see in pre-market pretty bullish action. The aggressive buyers trade into very high liquidity here around this 1565 area, and they trade through it up into 1570. and then it kind of goes sideways for a bit. So due to this, we'd be looking for a pullback maybe to this area to see if there's still buyers here. And then looking for this area up here as a target at the open. Okay, so what occurred? Right, well, this is our 1560 area here. We actually went down below it a bit, okay, and then we found the buyers step in here. Okay, and where did they go? Well, right up to 1575, but our target in pre-market was here, 1580, okay, and it comes right to it. Okay, now let's jump into the live market and let me show you that same phenomena. Okay, so hold on just a minute. Let's take a look at Facebook. Okay, now we have a cumulative volume delta. I'm going to open that up as well. Okay, and let's zoom out. And let's zoom out for the whole day. Okay, these numbers that you see on here, this is our iceberg detector, so I'm actually going to take that off as well. We're just going to look at a simple chart here. We're going to take off our VWAP. That looks good. Okay. All right. And let's zoom vertically. All right. Well, here's our open. Okay. Here's 9:30. Okay. Look how the liquidity pours into the market at 9:30. The volume pours into the market at 9:30. The cash open. Here they are on the bid. Okay. Price went up. They stayed here on the bid. Okay, they came down and traded it. It was absorbed here and bounced back up. Okay, then it did trade through, but it comes down to the next level here at 208, the figure. Okay, here's the target, the higher liquidity at 210, and just shy of it. And then up here you can see them never reached, of course, at 210.50. Okay, so live market, same example. Now we have understanding of where larger players are willing to sell and where they're willing to buy. And we can show any example here, really. This is one of the beauties here of that full depth of market that I keep on alluding to, and I haven't quite defined. So let's define it, and we'll look at Apple and define it here. Okay, same thing. All right, and let me take off the iceberg detector. Okay, we can detect ice. We have an algo that can detect icebergs. Anyway, here's 9:30, the open. Okay, nothing but bullish activity. First target reached here. Kind of an odd one, 191.30 or 25. But the real kind of juicy one is 192. The figure here, right to it. Okay, absorb. It actually traded through, but exhausts out. We come right back down to this little kind of cluster here. But we're looking for, since this is such a bold move to the upside, we're looking for continuation. Okay, still looking for 193, the figure up here, okay, which we haven't reached. But all of these areas here, and the big point is 9:30 open, you already know where they are, where they're layered in. Okay, you already have that data. So that's the advantage that you're getting just alone by understanding that full depth of market. Okay, and you can see all of their actions historically here, both current. This is current market here, and then this is all historical here. This white line separates the two. Okay, so yeah, it looks like they're trying to hold through here. They came back in. You can see that traded into 190, and they were here a little bit earlier, not as much, but they built up their position here at 192.50 and traded into it, absorbed it, didn't trade above it, but it came right back into it, and they jumped back in again here, okay, to absorb more. These guys are filled, they're short. Okay, so anyway, let's just see if we can, the buyers can step back in here and reach the 193 target ultimately here. All right. So we'll continue on, and then we're going to look at some more live data here, order flow phenomena that you guys can use to your advantage that we visualize. But since we have some good examples here, now let's see here. I went through all the examples. Okay. All right. Well, then I'll show you a few examples of some of the Bookmap users and trade examples they used, and how you can start to use it as well to your advantage. So here we're looking at SPY. This trader's looking at a candlestick chart here, 5-minute candlestick chart, SPY. Starts to note price going down here. Okay, kind of top of the range here, price starting to go down. He looks at a correlation. Okay, he looks at the VIX, the VXX, and then he notes that a very high liquidity here on the offer, and this should be negatively correlated. Okay, if price is going down, then there's the VIX should be going up. Well, he knows the VIX is actually going down. Okay, so something's wrong, right? So he's willing at that point. He's found an advantage. He's going to take advantage of the mispricing. Okay, so what he does is he actually jumps in and buys an ES option here, okay, at 13.25. You can see at 255. Okay, so he buys an option. He is now long the S&P E-mini here. Okay, and then looks back here and notes that price starts to go up. Okay, due to that correlation discrepancy. Okay, back up to the top of the range here, he's willing to cover. Okay, so then he sees that this is the correct move now. Okay, that price for the VIX is going down because the price of the negative correlation, the ES is going up, okay, or the SPY is going up. Okay, so he covers. Okay, the correlation is now in line, so he covers. It's just a 6-minute trade. Good for $1.75 here. It covers at 15. Okay. So anyway, that's one great way. We can take a look at some correlations as well. We can throw the NASDAQ up there and take a look. Another trader here was looking at VTVT. Okay, it's a dollar stock, right? He's looking at this 150 figure here, and he sees that we trade up through it on high volume here, okay, up above it. And now look at the guys here on the bid, very aggressive here. Almost 30,000 shares in 2 different areas at 150, and then again at 152. Okay? Then he's looking for, so he knows that they're here on the bid supporting it. Okay? There's no question about that. They're there. But he notes the aggressive buyers starting to step in here, and he sees the cluster here. Okay? So he's looking to get in here on the pullback at these areas of support and looking to take it up further. Okay, so it's basically going through resistance, and that resistance is becoming support. He's buying it and then taking it further up. All right, so let's go back to the live market here and see what's going on. Let's see here, our Apple example. Let's see if we can continue to rotate back up here. Yeah, I mean, it looks like it should, test up into 150 or 192.50 again. I don't see any reason. Look at the exhaustion here. And let's just zoom in a little bit more. Let's make these dots a little bit bigger. Okay, so look at these areas here and here. We just covered exhaustion. Okay, well, we're not seeing many sellers down here. In fact, look at the buyers starting to step in up here. It looks inevitable. It's going to trade into 150, and let's see these guys are layering in here also above 150 at 54 and 60 here, but still looking for the looking for the aggressive buyers here to trade up and through, and zoom out here and get our bigger picture approach. Okay, and looking for 193 as the target here. All right. Okay. So that's Apple. In fact, let's set some orders here. Okay. So just to show you how to set orders here in Bookmap, you've got some bracketed orders, etc. Boy, we're already at the figure here, so we already kind of missed it. Should have jumped in here when we saw it. But that's okay. We can look for maybe a pullback, or we can play a breakout here. Let's actually look for a pullback to this high volume node here. And how many do I want to set? We can set 1,000. Okay. And let's bump up our take profit and stop loss. Okay. Yeah, it looks like we're going to miss it here. Yeah, let's see. Just in case, you know what I'm going to do? I'm going to also place a buy stop here, so that'll take us into the trade on the breakout. I just want to show the trade management. Okay, there we go. So we're filled here at 192.51. Okay, 192.51. Okay, now this is just an example. It's I should go through the risk disclaimer again, so that we all understand that this is just to show trading here. All right. So yeah, trading equities and futures involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. So I just want to show some of the one-click trading because we set here we got filled here, and you can see the moment that happened, our bracketed order was set. 25 ticks lower. Here's our stop loss. Our take profit is right up here at 193. So at 193, I'm actually going to front run that high liquidity. And I'm going to place it down a little bit lower here. Okay. And let's see here. So just in case, I'm going to keep this. I might get filled here on this pullback. There I go. Okay, I'm filled. Okay, and I'm going to do the same thing. I'm going to move. Whoops. I'm going to move all of these. Okay, to the same location. Actually, let's see if we can even get up in here into 160. So the pullback's actually showing some size on it here. As you can see, the sellers are coming in, and so this might be all she wrote here for the. It might be kind of a double top here, but let's zoom out and get a bigger picture perspective here. Yeah, it looks pretty range bound, to be honest. Looks like it's going to come down to the bottom of the range here. Okay, but I would anticipate exhaustion down here again. Okay, let's, in fact, we'll set another order there. And play the range as well. All right, so that's Apple. And let's continue on. Let's take a look at some other. So you can see my stocks that I have up here. So let me know if you're interested in something in particular. Tesla here. We also have crude. Crude might be pretty good. Or I'm sorry, not crude. Exxon. Definitely starting to turn around here. NVIDIA. How's NVIDIA doing? and Netflix, which Netflix has been really volatile for all sorts of reasons. Well, mostly just their earnings report. Earnings report was good. It was just subscribers. Okay, same. Well, you can see the move to the downside, opposite of Apple here, and getting filled in some of these lower areas, 168, 167, 166. Okay, starting to find some buyers though. Okay, back up above this little range here. Let's jump back into our Apple and see what's going on. All right, and then let's also put a correlation up here. We can. This is one of the great things about using the equities here. We have the correlation tracker, and we're going to look at the Nasdaq. It's going to be this green line here. Okay, and so you know, let's see how the Nasdaq's doing compared to, or Apple's doing compared to the Nasdaq. In fact, the Nasdaq looks quite a bit more bullish than the than Apple. See how this is a swing here. We had kind of a double top in Apple, but instead here in the Nasdaq, it's breaking out to the upside. So we're actually trading one of the weaker stocks today in the Nasdaq. Right, but anyway, we're still holding on to our targets, looking for ultimately that 193 area up here, and let's see if we can get a boost here in Apple. Okay. So which ones are doing well here if the Nasdaq continues to go up? It's not Twitter. How is Facebook doing? Yeah, it's not Facebook. Well, we don't have anything here that's really showing something bullish. Maybe NVIDIA here. No, even NVIDIA. Yeah, they're all pretty much in the range here. All right, any questions? Okay, well, as we wait and just get a little more follow through here, let's jump back to the presentation. And I just want to go through a few more things. Okay, our full depth, our trader examples, went through those. And that competitive advantage. Okay, so being able to see, again, you know, following up here and reviewing, the advantage you're going to get immediately is with that full depth. Okay, being able to, and then being able to see, because it's recorded, that micro and macro structure and the algos and the larger players. Okay. All right. Okay, question and answer period, and then show you how you guys can get Bookmap as well for US equities. This is our older website, so it just got updated. I'll just show you here. This is the version that you're going to need, is either the Global or the Global Plus for US equities. Now you can subscribe yearly or monthly here. Okay, you get a discount if it's yearly. The reason you need the global, I mean, you'll be able to access digital currencies if you like as well, yeah, and futures data as well, all together. In fact, the Bookmap version I have open right now, I have all three markets. I have digital currencies here, as well as the US equities and futures, okay? All right, bottom of the range, I got hit here as well. So now I've got 3,000 shares in Apple. All right, looks like I'm going to get stopped out here actually. Yeah, just almost there. Yeah, okay. All right, so a loss on the Apple at the bottom of the range here. Still, I like the bottom of the range as well. I should have probably moved the stop out a little bit lower. In fact, if I see some more buyers starting to step in right here, right where I got stopped out, I'm starting to see them. If they come in, I'll be a buyer again. Okay, looking forward to trade back up to the top of the range. Okay, especially with our correlation tracker here. Let's see if we can get that. Okay, here's some exhaustion here, right? So let's place the buy stop. Oops. Okay, so I'm looking to see if buyers come in up here, I'll be a buyer. And here they come. Okay, so I'm filled here 192.31. And we'll wait again and see how this pans out. Okay, looking for, well, geez, at least a return back into the range and back to the swing high at least. I still like the ultimate target here at 193 up there. But we will see. All right, okay, what's going on here? Something just happened. Perhaps I have. No. I must have. Yeah, something just happened there. I'm not sure what that was. It sold about 200 shares though. All right. Well, anyway, that's still kind of waiting for a little more follow through on that. The Nasdaq is just kind of starting to sell off actually. So yeah, we might want to exit this one here. Yeah, let's just flatten this one here. Well, let's see, where's that Nasdaq going? Yeah, this might be the flush through, and then the move back up, and we'll see. All right, if we don't see the buyers up above this little area here, then we're going to just exit this. Yeah, that ought to do it. All right. Well, anyway, not the greatest example. The move up into the 192.50, that happened. We got in too late, looking for the extension, and went down to the bottom of the range here, and seems to be selling off here along with the Nasdaq. So unsuccessful example here. Nonetheless, it was just to show basically the trade management and the one-click trading here, right? But yeah, putting together the high liquidity as well as the aggressor. Okay. We still held on to this down in this area. It still looked pretty good actually, even though it came down to the bottom of the range. It's not until really down here we got stopped out looking for it to come back in here, and they did not come in with some size here. In fact, here was our clue again. I held on just to see if this might be a flush out. But anyway, yeah, it looks like it's going to continue down to 192, the figure here. Well, we can do a quick short on that, I guess. As we're starting to find some buyers now. All right, let's just do that and look for that move into 192. And we'll front run that. And now we're starting to find some buyers. All right, I'm just moving these orders up together. There we go. All right. Okay, so you'll need one of the global or global plus versions here. And then once you go through the purchase process for either global or global plus, the next step is log into bookmap.com. Okay, and then you can click on add-ons here, and then you can add dxFeed. So let's go through the different options that are available. You'll see when you click on the add-ons, these are the different options that are available. You have NASDAQ Total View for $69 a month. Okay, you have EdgeX for $59 a month, and then you have the premium bundle together, both of them, for $59 a month for the first month, but then $119 after that. Okay, so that's one way to get them. There's another way as well. You can just go to this dxfeedbookmap.com. I'm going to put this into the chat for you. Okay, there you go. And from that link there, go to pricing up at the top here. Okay, that'll bring you here, you know, the number one here, and then get it now. Okay, same information is here. So just click on this, and that'll take you to the link here, back to our bookmap.com website. All right, and then you can get your NASDAQ depth here, EdgeX, or that premium bundle, and choose which one you want, if you want global plus or global. All right. All right, so that's how you can get it. And let's go back here. And let's see any follow through on our Apple. No, not yet. But yep, still looking now. I mean, seems that well, NASDAQ's up above this area here, okay, in our correlation tracker. But here come the sellers here. So this was a pullback up into this area here. It did exhaust out here. Okay, so we did find buyers, but it did exhaust out, and we're just starting to find some sellers now. See how the sellers are starting to come in? Okay, so due to that, and this was some pretty good selling here. We can see it in the bar, we can see it in the cumulative volume delta. I'm looking for the retest down to at least the low here, but the target would be 192. Okay, so that's the swing. In fact, how you want to manage that this is all up to you. If you start to see that and you're looking to add into a trade, well then that would be a way you can do that. You can see that high liquidity is starting to come in here at 20 and well 18,000, 19,000 shares just showed up at 192.18 as well. So let's see how the sellers react to that. Okay, if we start to find buyers again, we're going to get out. Right? This has been a really choppy day, and this just put the kibosh on our whole insight here. Right? So this is new information. 18,000, almost 19,000 shares here. Okay, popped into the book. Okay, at an odd area, very, very high liquidity. We're finding buyers here now. Okay, so we're going to flatten this. Okay, it may come down here and they may pull, right? But we're gonna flatten it. It looks like they're just looking to. You can see the skew in the book here. Okay, all of a sudden we have this new information here. Okay, new insight. Why take the risk? Okay, especially if we find buyers. We saw the reaction to it here. So although this was a unsuccessful trade here, okay, we're reacting to what we see in the chart, the visualization here, what it's showing us. Okay, this just popped in. If this didn't pop in like this, and we wouldn't have found those buyers here like that, then 192 was the target. Okay, this is all new here. Okay, in fact, then this is the opposite. Look for buyers here. Start to step in. Look for this to squeeze higher. Okay, and then look for back to the 192.50 here. Right. Okay. Anyway, that's the different ways of reading this and the insights that you're getting, and you've seen the reaction here. If this were a footprint chart, you wouldn't have seen this. Okay, you would have seen the buying coming in, but you wouldn't have known why. You wouldn't have known that someone popped into the book here with 19,000 shares or 18,400. Okay. Right. So these sellers here, they're going to be squeezed. Okay. And we were starting to get squeezed, but now we're looking for a return back up. Anyway, that's some of the ways that you can help cut your losses and then even jump in on the other side. All right. Anyway, let's wrap it up. We've gone through for an hour here. If there's no questions, then we will catch up with you guys another time. You can always reach out to us at support@bookmap.com. Okay. All right, guys. Yeah, thanks a lot. We'll catch up with you another time. Bye-bye.